So after the last couple of videos where I talked about selling all of my S&P 500, a lot of you have come to me and asked what have I actually bought instead. So I'm invested in a range of assets. So I'm not going to talk about everything. I'm going to isolate it purely to what other indexes I have invested in. So obviously all of the usual caveats apply. This is not financial advice, and I strongly advise not just to copy what I do and to do your own research. I'm not telling you to invest in any of these things. Basically, to summarize the long and short of the last video is that the risk in the S&P 500 is actually hugely larger than what most people actually acknowledge. So what I've actually done is focused on a philosophy of having more balance and more diversity. So actually I put a chunk of my investments into the all world index, which is far more diversified because it includes a range of countries and it isn't just purely based on the US. However, world and all world indexes are not perfect because even though their name implies that you're very diversified across the world, it's still mostly US centric. In my opinion, there's a huge gap, which is China. If you look at all of the standard all world indexes, they either don't include China at all or allocate a very small proportion, even though nowadays the size of the economy of China is looking similar to the US. And all of the major growth projections show China actually outperforming the US and a lot of the West. So I actually balanced it out specifically with this index, the Allianz China Index. So a really big point I really want to stress here, I didn't invest in it because I think it's going to go up, which sounds a little bit counterintuitive, but the point I'm trying to stress all the time here is you don't know whether something's going to go up or down. All you can do is invest in solid investments that protect you from a range of different market conditions. So it's mainly for balancing purposes. And to really demonstrate and prove my point, and to show that I actually put my money where my mouth is, I invested here, as you can see, in April last year. And I want you to look at this past performance chart. At the time, I actually put my own money in. It had seen basically 5 years of consecutive losses. So why did I actually do this? Most of you are probably thinking, isn't it super risky to invest in something that's basically gone down 5 years in a row? Are you like crazy or something? And no, and the point I really want to stress here is that looking at the past performance of a chart and expecting it to basically by and large do the same thing in the long run is just stupid in life, but particularly in investing. So stop listening to financial influencers who have zero idea of what they're talking about. They have no formal financial training apart from opening a stocks and shares ISA and investing for 2 years or something. Anyway, if you want more in-depth analysis and research on investments and prospects and opportunities that I'm currently looking at, make sure you sign up to my newsletter where I have an opportunity to go a lot more detail on these topics.